A quiet revolution. The countdown for the Vietnamese Dong RV has begun. The financial world is currently experiencing subtle yet rapid shifts, unnoticed by most. However, behind closed doors at some of the world's largest banking institutions, there are critical adjustments being made. These shifts are happening in quiet corridors, through internal memos, software updates, and strategic changes that have yet to make it to the public eye. For those paying attention, the signals are crystal clear. The time for the Vietnamese Dong VND Revaluation RV is closer than many realize. This article is not based on rumors or speculative hearsay. It draws from verified moves within the financial institutions, discrete updates from banking insiders, and internal leaks that point towards an imminent event in the currency markets. If you're serious about holding the Vietnamese Dong and preparing for a significant event, this is the article you cannot afford to miss. Let's break this down. The quiet bank memos, leaks, and what they reveal. The first signs that something major was brewing emerged late last week when internal bulletins from two of the largest U.S. banks were leaked. These bulletins, intended solely for internal circulation, were never meant to be shared with the public. However, what they revealed is far too significant to ignore. The memos were directed at foreign currency divisions and wealth management desks, specifically addressing preparations for what was cryptically labeled as a Tier 4B currency settlement event. For those in the know, the term Tier 4B refers specifically to private holders of exotic currencies like the Iraqi dinar and the Vietnamese Dong. This specific language, though somewhat reserved, was unmistakable. In essence, employees were instructed to 1. Update foreign currency intake forms 2. Refresh anti-money laundering protocols 3. Review and refine identity verification procedures. All of these tasks are typically initiated by banks right before a major asset conversion event. Such preparation is exactly what one would expect before a significant shift in currency values. Initially, many dismissed these reports as just another piece of financial gossip. However, as more signs began to emerge, it became clear that there was something more substantial happening. The growing hints. Across U.S. banking hubs, the pattern was not limited to just one memo. Reports from major financial hubs in New York, Los Angeles, Houston, and Miami, all home to large foreign exchange operations, further validated these claims. At major institutions like Chase and Wells Fargo, quiet upgrades to internal banking systems were underway. According to leaked screenshots from foreign currency desks, these upgrades were referred to as Phase 2 readiness for the upcoming currency transition. Specifically, the Vietnamese Dong was marked for review in restricted circulation. This was not a mere mention in passing. It was flagged as a currency targeted for upcoming adjustments. Moreover, there was an unexpected spike in call activity across private banking desks. Numerous high-net-worth individuals reported receiving calls from their wealth managers asking if they held any restricted exotic currencies, including the Vietnamese Dong. For a banker to ask such a direct question, especially when it comes to an exotic currency like the Vietnamese Dong, indicates that these institutions are aware that major changes are on the horizon. They understand that specific currencies are about to experience a shift from being largely illiquid to becoming more freely tradable, possibly at significantly higher values. Vietnam's economic boom and currency implications. While these internal banking movements are vital, we must also look at Vietnam's economic trajectory to understand the bigger picture. Over the past 6 months, Vietnam's economy has been quietly but steadily expanding. Foreign direct investment, FDI, is at an all-time high, with major tech, manufacturing, and energy firms shifting operations to Vietnam's free trade zones. This influx of international business is setting the stage for a major economic transformation, and more importantly, for a stronger Vietnamese Dong. In April 2025, Vietnam finalized a series of important economic agreements, including bilateral trade deals that allow for settlements in native currencies. These agreements enable Vietnam and its trading partners to bypass the US dollar, strengthening the demand for the Vietnamese Dong. Additionally, the State Bank of Vietnam has been on a buying spree, purchasing gold reserves at a pace that reflects the broader global shift toward asset-backed currencies. These moves are in line with similar actions from countries like Iraq and Russia, as well as emerging BRICS nations. The international community is preparing for a new era in which the US dollar no longer holds the same dominance in global trade. Vietnam is not just sitting idly by during these developments. The country has also been modernizing its digital banking infrastructure. New systems compatible with blockchain technology, along with real-time settlement systems, are being introduced to streamline and strengthen transactions. This is yet another indication that Vietnam is preparing for something substantial, something that will require a stronger and more robust currency. Bank testing and simulated exchange rates. As we dig deeper into the behind-the-scenes activity, we see that the Vietnamese Dong has been appearing in internal trading desks across European banks as well. Sources inside two major European banks have confirmed that the Vietnamese Dong has been included in simulated rate testing. But what does this mean? It means that financial institutions are quietly preparing their back-end systems for the expected shift in currency values. By running simulations and testing liquidity flows, these institutions are preparing for a scenario in which the Dong might experience significant appreciation. One such simulated exchange rate that has been leaked shows a potential value between 47 cents and 52 cents per VND. This is a dramatic contrast to the current public exchange rate of approximately 23,000 Vietnamese Dong to $1. Even a modest adjustment to half a dollar per Dong would represent one of the largest wealth shifts in recent financial history. The private banking documents indicate that this potential adjustment will likely occur gradually. They describe a managed float, meaning the currency would steadily appreciate over time rather than experiencing a sudden surge in value. For Tier 3 and Tier 4 B holders, private individuals who hold Dong before the public adjustment, this could mean that they have the opportunity to exchange at higher pre-float rates. However, the catch is that the window for these opportunities may be limited. Tier 3 and Tier 4 B holders may be offered the chance to redeem their currencies at favorable rates, but only under very strict conditions and tight time frames. Those who miss this window could be forced to exchange at lower public rates once the market float begins. Preparing for the shift. What you need to do now. If you're holding the Vietnamese Dong and want to ensure you're ready for the upcoming changes, now is the time to take action. Preparation is key to maximizing the potential of this situation. Here's what you should be doing right now. 1. Verify your currency. Ensure that your Vietnamese Dong holdings are clean, undamaged, and fully authenticated. If necessary, take your currency to a licensed dealer or currency expert for verification to avoid any issues when processing your exchange. 2. Gather documentation. Collect all documentation related to your VND holdings, such as purchase receipts, notarized affidavits, and any other proof of ownership. Having these ready will help facilitate a smoother process during your redemption appointment. 3. Monitor your communication channels. Keep a close eye on your email inbox and text messages. Redemption center invitations are expected to be sent quietly, often via encrypted emails or trusted communication channels. If you receive an invitation, respond immediately, but also verify its authenticity before taking action. 4. Protect your privacy. Privacy is your greatest protection in this process. Avoid discussing your currency holdings publicly or posting about them online. Doing so could result in being blacklisted from private redemption opportunities. Plan ahead. Consider whether you'd prefer to accept a structured payout and whether you're willing to sign a non-disclosure agreement, NDA. Being prepared with questions and having a plan for your appointment could mean the difference between maximizing your exchange and leaving value on the table. The countdown has begun. As we can see, the clock is ticking, and preparations are underway across financial institutions around the globe. The Vietnamese Dong is increasingly being flagged as a currency poised for revaluation, and those who are ready to act when the opportunity arises could stand to benefit greatly. The countdown for the Vietnamese Dong's revaluation has begun. Whether you've been holding your Vietnamese Dong for years or are just starting to monitor this situation, now is the time to get informed, prepared, and stay sharp. As these developments unfold, stay vigilant. The next few days or weeks may provide the evidence that everything we've discussed here is about to come to fruition. Be ready, because the opportunity to exchange your Vietnamese Dong at an advantageous rate could be closer than you think. If you found this breakdown insightful, hit that subscribe button and turn on notifications. We'll continue to bring you the real developments before they're widely reported. Stay ahead of the curve and be prepared for what's to come.